So I heard you like gaming. Is that true? I mean, because I like gaming. I mean, I love investing too. So I figured what was the best way for me to get involved in the gaming sector, but also get to invest into it? So today we're going to be taking a look at Corsair stock. If you couldn't already tell from the title, let's hop right into it. All right, so here's how we're going to lay out this video and how we're going to kind of go through Corsair as a company and also one that I've analyzed. And I'll link down below. I did a Substack article on this, and I also did a bunch of Reddit posts, which actually ended up with a lot of upvotes. So I feel like I'm on the right track as far as my social media is telling me. So the way we're going to lay this out, it's going to be introduction, the products that they offer, the financials of the company, the industry with which they operate in, and then of course strengths, risk, and then the valuation, and then I'll kind of give you closing thoughts at the very end. So if you're interested in that, make sure to hit that like button and subscribe down below, and let's hop right into it. Now, first things first, what is Corsair? If you've never heard of Corsair before, who are they? What do they do? What kind of money do they make? How do they make this money? You know, what's the whole business? And really, what can they do? Corsair is a hardware and peripheral it's a hardware components and peripheral brand that works within the computer space, and now they've been trying to venture into sort of the gaming space in general. And really that's where their focus is that gaming space. So both PC gaming and console gaming, but they just recently started moving more and more into the console gaming brand, and I'll talk about that here in a moment. So the important piece you need to know that is they're actually broken up into two different segments. So you have your gaming components part of the business, which is probably the majority as of right now, but it'll probably fall off as the business starts to grow and grow and grow, because the peripheral side of the business will really become the big portion of it. Now, the peripheral side of the business includes things like keyboard, mice, mouse pads, any sort of streaming products. Oh, they own Elgato. They own Scuff Gaming. These are some big brands in the gaming space. Elgato specifically focuses on face cams, green screens, streaming decks, streaming components for your actual PC to be able to actually record video or stream to a different PC and record it that way. They do all sorts of things in that market. And that's really what the peripheral side of the business really focuses on. It's really anything that revolves around gaming, that's the peripheral side of the business. Now, the component side of the business, that's going to be your RAM, SSDs, power supplies, cases, really anything that goes into the components. So if you were to build a computer, you'd have all of these products offered. And on the screen, you guys are going to see some of the different product offerings from both segments that you'll be able to see. Now, they make money by selling this both on their own website, on third-party websites like Amazon and Best Buy, and in retail stores like Walmart, Target, Best Buy, the like of that. So anytime you can think of, you know, do I need a computer or I need computer parts or something like that, Corsair might be one of the top brands that you'll end up going to. And then one last thing, this is actually gonna come from their investment presentation that they had. And the thing is you can see here, all of the different kind of leadership that they have within each product category. Now, I would say primarily, since they're going to be moving more and more into the peripheral business, their competitors are really going to be probably Razer, Logitech, and then they have a couple different competitors in sort of the RAM and component side of the business, but I wouldn't focus too much on that because I feel like for the most part, a lot of that stuff is more commoditized than the peripheral side, where I feel like they can get more of a luxury premium on some of their products. So in terms of growth opportunity, I would focus more on the peripheral side. That is also the higher margin side, as you'll see once we get to the financials. And then one last thing I really wanted to add in there as well, one other brand that they recently bought, recently, at least within the last couple of years, is they bought Origin PC. These people also build pre-built computers, so you don't have to piece computers together and buy a bunch of different Corsair parts as well as some other brands parts to really get a computer going. You can just buy a high-end gaming PC right off the bat. Everything and all the maintenance is going to be taken care of one company rather than having to deal with multiple companies while building your computer. So I feel like I should add that in really quickly before we jump to the next part. Now, one of the big pieces about Corsair Gaming is really the tie into how cheap this stock is really selling for and the amount of revenue that it is generating year after year after year. It's growing at a CAGR of probably almost 20%. especially over the last couple of years, it has been absolutely massive, the amount that they have been growing. So as of 2020, though, they're just shy of $2 billion worth of revenue. And as of recent, if you haven't already heard about the Q3 earnings, they had actually guided down from when they had the outlook in Q2, they had guided down and actually gave people a heads up that, hey, the Q3 earnings aren't going to be that good because they're affected by the shipping costs and all the inflation that we're currently seeing in the supply chains right now. So taking a look into their current financials as of Q3 2021, we actually just got their earnings here. One thing I wanted to note is that their TTM, or their trailing 12 months revenue, as of Q3 2021 is $1.94 billion. Now, they have guided down. They don't think that they're going to hit $2 billion, so that's totally okay. 1.9 is probably about where we'll see it settle at once we get to the end of the year for Q4 and we see the actual earnings come out for Q4. Another thing I wanted to note, their profit margin is currently sitting at about 6 to 7%. You'll see this increase though as their peripheral side of the business, their gross margin and profit margin is a lot higher. And you'll see that on the screenshot here, that you can see that the margins are definitely a lot higher on the peripheral side, and that's something that they're pushing for. So as the company grows out, and as you see this business segment grow out, it'll actually help push those margins up a lot more. And that's something that I'm really looking forward to, especially as they move into more of the online sales. They're trying to build out their direct-to-consumer rather than going through Amazon or Best Buy. They want to go through their own website to be able to sell these things. So that'll also help as well, because then you don't have to pay any sort of markup. You can capture the entire cost. So I think that'll be really great too. As of making this video, we're going to be looking at trailing PE according to Yahoo Finance at 21.45 and then a forward PE of 16.26. Now, those are pretty low relative to the rest of the market. So if you've been looking for a value stock, this one might be it. I really do think that there's some opportunities here. One other thing to note, their enterprise to EBITDA, it's 12.71. That's a little higher than some of the other companies that I have been looking at. But again, I think the value for this is here, especially if you can get in at a lower price. I was able to capture sort of the under 25 range. That's where I set my buy price at. And you'll see why here in a second, once I get to the valuation portion, why I had it there and why I really like this company. Now, the last thing to note really is the cash and the debt. So right now they have $71 million worth of cash on their balance sheet, and they have a total debt of $309 million. Now, that's a lot of debt. I do acknowledge that. That's one of the risks that I had laid out. They did, however, refinance part of that. They did refinance the entire debt, which I really liked because they were able to take down billions of dollars worth of interest payments by just lowering the interest rate on that debt. So I think that was a really smart move by the management, and I honestly applaud them because that was a great move, and it also helped their credit as a company. Now, as far as the industry goes, many of the analysts and people within the industry really believe that the TAM, not only for Corsair specifically, but just the industry as a whole, this is still a growth industry, and I really do think that over the next 5 to 10 years, we'll see huge explosions in both the esports side and the online gaming side, especially as metaverse is taking off and all those things. So it'll be interesting to see how Corsair can capitalize on these opportunities that are coming up, but I think that they're in a position right now where they can do just that. Now, one thing that I wanted to note, they predict by 2025, analysts predict, that the industry will generate more than $260 billion in revenue. I don't know how much of a portion of that pie Corsair will end up having by 2025. But what I do know is that when the pie is growing bigger, you don't necessarily have to have this crazy market share in order to make a lot of money. You can just keep your same size, but if the pie keeps getting bigger, you're gonna have more and more and more and more for their share that you already own. And they own a lot. So I really do think that the growth opportunity is there, especially at a lower valuation. Their market cap as of today is sitting at about $2.5 billion. So it's a small cap. It's not gonna, it's not gonna not move huge. You will have volatility, and that's kind of the nature of the small cap, especially over the last, 9 months. So I think that the opportunity, though, as far as the component side and on the peripheral side, is really there. So for the last thing, the catalyst that I see with the components, we're having a refresh cycle, especially with Intel and AMD pushing into the new platforms. We're having DDR5 come out, and then obviously we're having faster and faster DRAM come out, and this will help push both DDR5 modules from Corsair as well as SSDs, and just creating new computers entirely. So you're gonna have to buy a new power supply, you're gonna have to buy a new case possibly. So I feel like the opportunity for that new refresh cycle of computers, which will probably take over the next 3 to 5 years would be my guess. And I used to work in a computer store, so I saw when we moved, kind of when AMD had that first Zen product come out, it really pushed a lot of people to come and buy new computers because they wanted the brand new thing. So I do think that over the next 3 to 5 years, we'll see some great gains both in the peripheral side and on the component side, but I think the component side's margins aren't going to expand too much, just because I think that the inflation of the costs that are going into making these products are going to probably stay where they are. DDR5 is more expensive for the end consumer, so I can't imagine that the prices are going to come down anytime soon. So a couple things I wanted to go over as far as the strengths go. First things first, the brand name and reputation. Corsair as a brand is a well-known brand throughout the space. They have a great social media presence, and I think that as a brand, not only do they own Corsair, they own Elgato, SCUF, and Origin, which I already mentioned. And these are big players within each of their space. So SCUF makes custom controllers, Origin makes custom pre-built PCs, and then obviously Elgato makes a lot of those streaming products, which there's not really another company that captures everything like Elgato does. And I really do think that their push into this space, at least they'll be able to lead the charge and really be sort of the pioneers of creating these high-end products within the streaming space, which has gotten a lot more popular. I remember hearing about Elgato when it first came out, when all their stream decks and stuff first came out. So it's amazing to see how this brand's growing. And I didn't even know Corsair was a public company up until a couple of months ago. So, I mean, you learn something new every day. The other thing that I wanted to add on, they're trying to build into the software and make sure that all their products that they're offering have some sort of add-on software. So whether you want to combine the lighting, configure the performance, or any sort of thing like that, they have software that'll do that for you. And I think for a lot of people, when they get one brand, they want everything to work together well. So, if you get Corsair RAM, a Corsair power supply, and Corsair case, you're most likely going to get a peripheral or something that goes along with that. So that way, all your RGB lighting and things combined, and that way you can only use one. Because for me personally, I just want one software. I don't have to open a bunch of things to configure a bunch of different things. I'm sure there are some people out there that are fine with that, but I think for most users, if they have a good experience with one product, they'll probably keep buying Corsair products. So that's not surprising there. One thing I wanted to mention, they're going to be using the sort of sponsorship and sort of brand through streamers route. And some of the names that I really wanted to add onto here was Summit1G. It's one of the biggest streamers on Twitch and just in general on the internet. You got Sacriel, you got Loserfruit, and then obviously you got Bajira. I probably butchered that name and I'm very sorry, but those are some really big streamers that they have in this space, and that's not even the comprehensive list. Those are the ones that they just had on their website. There's a lot more teams and items and things that they actually sponsor, like Team Envy, BIG, Vitality, Team Secret. And again, they sponsor more than just the ones that they had on the website. Those are just the ones that I could find right off the bat. And then one last thing that I wanted to note, because of the pull forward in demand that we had from the work from home space, people were buying gaming products, people were buying just peripherals in general that they could have and that they could use, that they felt comfortable with. So if they buy, let's say they bought a keyboard and they didn't buy a mouse, they'll most likely move to buy a mouse from Corsair if they haven't already, especially if they had a good experience on that one product that they bought. So I wouldn't be surprised over the next coming years again to see that refresh cycle kind of come through and see people add to their Corsair devices, assuming that they had a good experience and that they didn't buy one already. And then lastly, for the strengths, actively decreasing the debt. To give you an idea, their debt at Q4 2019 was $505 million. And over the course of give or take a year or two, they've actually knocked that down to that $300 million range, and they were able to actually refinance that. So that's actually a really good thing. It's something you want to see from management. They're very aware of the leverage that they had, and I think that overall this will help the company's health in the long run as they pay down their debt. And it was smart of them to actually use this sort of over exuberant time of buying peripherals, buying components in this work from home time. They use a lot of that cash and just plowed it straight into the debt to get rid of it. So I think that that was actually a really, really, really smart move. Now, here's some of the risk that I can see. And again, if you see me looking down, I'm looking at my computer right here because this is where I keep all my notes. So sorry about that ahead of time. I'll see if I can remember it, but I just wanted, some of this stuff is really important. So the three risks that I wanted to talk about was EagleTree, global supply chain, and then obviously still the high debt. So as far as EagleTree goes, as of Q2 2021, they had almost 59% that we note this, because if they decide to, make a move, sell some stock, it's gonna affect you as the end buyer and the retail stock investor. So that is really something to note. That is probably one of the biggest risks of investing into this, is the fact that you have this huge owner of outstanding shares, and they did sell shares when we saw the run up back in the spring, sort of the spring into summer almost timeline. So I would be aware of that. Look into it. It's something that I would note in your due diligence. Just make sure you're looking into this, because it is a big ownership of a company, and if they make a move, it'll definitely move the stock price, especially at 60% of outstanding shares. They'll likely wait until the stock goes higher. I think their strike price was somewhere around like $5. So I mean, they already have huge gains, but I think that they can get bigger gains on this. So it is something though I would really, really look into when you go to look into this company. Look at that EagleTree ownership. It is very important. Now, the other thing, the global supply chain shortage, we're not seeing any sort of slowdown right now in the inflation and in the shipping prices going up. This will affect Corsair's bottom line, as I mentioned towards the beginning of the video. And I really do think that it's something that you should look into and see if there's not more downside to the stock in the short term at the very least. And really the important thing to know is just watch what's happening in your supply chain, watch the shipping costs, and I think you'll do okay. I think that we'll see some downside because of this, but again, they've noted it, so it's kind of out there at this point. The last point that I wanted to make on the risk was the high debt. I think that it's really, I've said it multiple times throughout the video, they have refinanced their debt. They're trying to get it down as far as they can. They were smart to use this exorbitant amount of demand that they had this year as far as for peripherals and components to really sell what they were trying to do, and actually use a lot of that cash that they received this year and paid down some of that debt. But again, they are very highly leveraged. It's about 3 or 4 times their current cash. And then even if you look at their free cash flow trailing 12 months, it's give or take 3 or 4 times their cash. So really, that is something that you need to be wary of. It's something you need to pay attention to. And as you do your due diligence, see if that fits your risk profile, and make your decisions based off of that. So the last thing that I really wanted to go over was, how did I come to my valuation? Where did I get these numbers from? How did all of this happen? And then kind of go through that with you guys real quick, and then we'll wrap up the video. So first things first, current outstanding shares, 94,186,000. This is coming straight off of Yahoo Finance. I did look at their 10K and 10Q. So I know that most of these numbers, if they're not exactly 100%, it's close enough to get me to the number that I need to be. Current revenue, I lowered this a tiny bit. I think that 1.9 billion is probably going to be about right. Probably higher or lower, but it's still within their outlook, so I'm completely fine with that. I think this was towards the middle or lower part of their outlook. Obviously, share price, current market cap, fair value. You'll see how I get the fair value here in a second. The current estimated free cash flow, this is actually probably higher than what their trailing 12 months says it is. I think that this is gonna be about right, but honestly, again, this is more so to get the percentage. It's not gonna affect the calculation. The calculation is gonna be a percentage of the revenue. So you'll see why here in a second. Their current net debt is $176,916,000. This is just taking your total debt and minusing out the cash. I believe on Yahoo Finances it was a little different how they're calculating the cash portion that they're subtracting, but that's fine. Net income, $119,288,000. This is the trailing 12 months that they had on there. Again, that's just using to get the net income margin for the TTM. And then obviously you have the current PE and current price to free cash flow. These are based off of the numbers that I pulled in. So the thing is, this is modeled after Everything Money's DCF that they use. I really think this is the best way to take a look at it. So let's take a look at some of the inputs and then kind of explain the two boxes that you see below and above the inputs. So the first one's gonna be share change. Is very important that you're paying attention to share change. I did 1%, 0.5%, and 0%. I think that these numbers probably are a little bit lower on the low side than really will happen. I think really why I made it so low is because of the fact that EagleTree owns so much. There's no way they would let them get diluted, 5, 10%, 15% a year. It would need to be dire straits if that were happening. And it would probably end up on the secondary market. We probably wouldn't even see that on the primary market, at least at the beginning. Revenue growth, 5%, 10%, 15%. This is probably on the low side for at least the next couple of years, but I think it'll average out, and this is over a 7-year period. I think it'll average out around these, so I'm okay with leaving them there. Profit margin, you got 6%, 8%, 10%. Free cash flow as a percent of margin, revenue, 6%, 7%, 9%. And then obviously PE and price of free cash flow, 12, 8, 15, or 12, 15, 18, rather. And then you have discount rate of 12.5%. Now, for the discount rate, you can use WACC or weighted average cost of capital. I don't typically use it in my calculations. I usually just use the required rate of return that I have. So in this case, 12.5%, but even if you put it down to 15%, it'll get you whatever you need. So it really depends on what your required rate of return is. Again, if you put it to 15, it's gonna be an even lower DCF number. So if you're okay with getting 15 or you're okay with getting 12 or whatever your amount is, totally fine with me. So for the bottom though, you got the cost of equity. What this is gonna do is gonna take your DCF number and then it's gonna subtract out the net debt and divide by the total shares. So that's how you get to that cost of equity. And again, if you wanna see this, look at the Substack article down below. You'll see the link to my DCF there for this, this example. And then, so for me, $24.23. When I first did this, it was around $25. It's gone down a little bit because the numbers have gone down. And I think that's about right. I think I'm just shy of $25 as my buy price. So I'm completely okay with that. I'm a happy holder. I think that as this keeps going down, and I hope this goes down in the short term so I can keep buying more and more and more, because I'll definitely load the boat if we see some short-term weakness. Now, as far as the table that's above it, this is more of Everything Money's piece. You have the net income and estimated net income, estimated free cash flow portions. So basically what this is saying is that you have your worst case, best case, and base case. You want it to be lower than your base case. So like in this case, our base case for $28.14, that's about 7% upside from the current price right now. And the estimated free cash flow is about $24.62. That's a negative 6% downward move in terms of the stock price today versus what we're calculating. And I think that, again, $24 to $25, I think that's right about a good buy price. Again, not stock advice, not an advisor. This is for entertainment purposes only, but this is where I'm buying, is around the 24 to 25 mark. But anyways, guys, let me know if you have any comments down below. Leave me a like, leave me a subscription. If you like what you see, let me know if you have any other stocks you want me to take a look at. I'm going to be doing DD on some of the other stocks that I hold, and then some of the ones that I'm looking into. I have a discovery article if you want to go look at it on that Substack website as well. I plan on adding a discovery video to this as well. So stay tuned for that. I hope to see you all next week, and we'll see you next time. Thank you very much. Have a great day.